Okay, now let's talk about how to account for an investment in stocks. So when you're doing this, you'll need to look and see which method you'll be using. And you'll do that by looking at the ownership percentage. And for this problem, we're going to assume that we own less than 20% of the stock that we're buying, of the company stock that we're buying. So we're going to account for it by the cost method, which just means that we're going to report this at cost when we buy it. Any dividends that we receive, we're going to record as revenue. When we go to sell it, we're going to sell it and recognize a gain or a loss on sale of investment. So this is if we don't exhibit any control over the company that we're buying because we own less than 20% of it. Here's how it's going to work. On February the 10th, we purchased 15,000 shares of Toby Company at a price of $25, plus we paid $150 for a brokerage commission fee. So that means that we bought 15,000 shares at $25 per share for a total, if I multiply across, of $375,000. We have to add our brokerage commission of $150 to find out how much we paid and how much we're going to put this investment on our books at. So it goes under investment. That's an asset account because we're holding it for sale. So investment of Toby Company stock. I'm going to debit for the full price, including that brokerage commission, $375,150, and I bought it using cash, so I will show that my cash went down by the same amount. That is purchasing it using the cost method. Next, I'm going to receive dividends. On April the 12th, I received a 40-cent per share dividend. So that means that I received money, and I received 40 cents times the number of shares that I own, 15,000 shares. So I received cash dividend of $6,000. Under the cost method, I record my dividends as dividend revenue. On May 29th, I decide to sell some of my shares. I'm going to sell 6,000 of my shares. So I need to figure out how much I originally paid for those so that I can compare how much I'm selling them for so I can decide if I have a gain or a loss. So my original price was $375,150. I divided that by the number of shares that I originally purchased, and I find out that with that brokerage fee included, I paid $25.01 for these shares. So now that I'm going to sell some of them, I'm going to say 6,000 shares, that's how many I'm selling, times this $25.01. So my original purchase price, which is now how much I'm selling, is $150,060. Alright, so I'm going to be getting rid of that. So it's called investment Toby Company stock. I'm going to credit that because I'm selling it, so it needs to go away for $150,060. Whenever I sell something, I get cash. I call that proceeds. Let's see how we calculate how much proceeds I got from this sale. So it tells me that I sold 6,000 shares for $32 less $120 brokerage commission. So I had to give that to the brokerage fee. So what I will do is I will say 6,000 shares that I sold times the $32 per share that I sold it for, and I'll subtract out the brokerage fee that went to pay for this transaction. So when I do that, I find out that I get $191,880. When I compare my original purchase price of the 6,000 shares to the amount that I got for selling the 6,000, then I can see that my proceeds is greater than my price, which means I have a gain. And a gain has a normal credit balance. Gains work just like revenues do, so they have normal credit balance. So I'll need to put it in as a credit, $41,820. So before I move on, I'll make sure that my debits equal my credits. My total debits for this journal entry equal $191,880. My total credits also equal $191,880, so I am in balance. So that is how you account for the purchase of a stock investment under the cost method, as well as receipt of dividend, and then a sale of part of your shares of stock, all under the cost method. So let me know if you have any questions. Thanks.